All right, y'all. Support and resistance. This is a big lesson in this unit on trading basics because support and resistance is a key concept and probably one of the most common terms used in technical analysis by traders in the Forex market. You are going to hear it over and over again. And so I'm going to give you a good foundation in understanding what it is and how it works. Using support and resistance, you can really build some extremely profitable trading strategies with very high success rates, as well as good risk to reward ratios, assuming you have the right confluences and that you have solid trade management. So I will right out the gate recommend that you spend some time in the chart completing the unit challenges that I have set up for you here in the course, as well as exploring support and resistance on your own in the charts. After you go through my unit on back testing, you'll get a little clearer of actually how to do that and get numbers with that. My husband currently trades a really profitable strategy that is basically solely based on support and resistance. And he pairs that with a few candlestick patterns and some really strict setup rules. But that's the strategy he really trades only right now. My current strategy uses a form of support and resistance that uses and employs rules closer to supply and demand zones, but they function exactly the same as support and resistance. And some of my favorite strategies that I've traded over the last several years centered around support and resistance also. So it is totally a solid concept, as stated already, and worth your time and effort to learn. So let's first define what support and resistance is. Support and resistance is a price point, or usually it's a range of prices in which the market was unable to push past in order to continue in one direction or the other. When looking at your charts, support and resistance points are usually obvious swing highs or swing lows in the market, or it is a visual zone where price failed to move beyond for a period of time. During that time, if you looked at lower time frames, opposite of your trading time frame or the time frame which you mark your support and resistance zones, if you go down in time frame, you're usually going to see price bouncing in that zone, in that support or resistance zone, or at that level over and over trying to push past. Or rather, it's either taking profit or taking orders in order to move the price of the pair. That's what is actually happening. Support and resistance can be identified through using, like a diagonal trend line, like we talked about in our last lesson. But here in this lesson, we're specifically going to be looking at horizontal support and resistance zones, which always have to have at least one price point at which to base your support or resistance zone off of. So how do you know which line is support and which line is resistance? Your support line is always going to be the line at the bottom. It is a price where the current trading price of a pair basically stops falling. When the price reaches a support zone, you're usually looking for the market reaction to be to reject at that zone and then push higher. Your resistance line is always the line or the zone at the top. It's a place where the current trading price of a pair tends to stop rising. And when the price reaches this zone, a resistance zone, you're usually looking for the market reaction to reject and push lower, okay? Or to simply put, an area where price tends to stop rising based on previous market behavior. So if you just think of it like resistance being like your ceiling, like you can't go any higher, and support being like your floor, which gives you the support, like you can't go any lower. But resistance again at the top, support being again at the bottom. And so let's dive a little deeper into support and resistance in the different ways that they are used and how they flip and are interchangeable with each other. Support and resistance zones are fluid and interchangeable. In looking at support and resistance, what was once support can become resistance, and what is resistance can become support. This is very fluid, and you will get to a point where you can just recognize which is which without even a thought. But with that said, this is a key concept. This fluidity and this interchangeability is something that you need to learn and you need to get used to. When price passes through resistance, it could potentially become a support. When price passes through a support, it could potentially become resistance. Support and resistance is totally fluid and interchangeable. But the way I want you to think of this, though, is not by, a line that you can draw on the chart or a box like is pictured here, but by price point reactions. If you think of it as this is a price, this zone, this box that is drawn right here being a price point or a range of prices, this will put you way ahead in the trading psychology than most new or sometimes even seasoned traders have. Regardless of which way price is bouncing, you need to look at support and resistance simply as a zone in which, or a price point in which orders are placed or profits are taken by the market makers, which thereby make the market reject or, possibly blow through and ignore a zone or a price point range. And if the market makers have used that zone heavily in the past, it bears at least a passing interest for you for the future. Looking at this graphic, what you have is you have a zone of support here and support here marked in blue, and you have zones of resistance here and resistance here marked in red. But what we're going to go over is how that's fluid and how support can become resistance and resistance can become support. So you have a zone of support, and assuming, that price has done some stuff here in the past and that this is already established level of support, we're starting right here at a level of previously established support. Price moves up. Now we also assume, because this is a previously established zone right here, that this was also an area that we saw price coming down and stopping, having support here in the past as well. So because we don't have, the previous history, prior to that to the left, we are going to use our imaginations, but knowing that this level and this level are previous levels of support, we see price bounce here at this level of support, and we see it blow through this level of support right here. Price comes up, hits this previously established level of resistance, and it stops right there. And price bounces, comes back down to this level of support right here, and it's still support at this point. So this is still resistance because price bounced and stopped, and this is still support because price again bounced and went the opposite direction. So price comes back up from a level of support to a previously established level of resistance. And what happens? Oh, it's a level of resistance. Price bounces again. However, this was just a retracement move, just a small correction before price blew through this level of resistance, didn't respect it on this particular, on this particular leg of an impulse move. So in the entirety, if you look at it, the entire move started from here to here. But what it did was it had a bounce at a previously established resistance zone, had a small retracement or correction before it continued up now to this new level of resistance. And then price bounced back down, and this is where price that was or a zone that was at a price level of previous resistance. Now this red level of resistance is support because price bounced again, hit this level of resistance. So this is still a level of resistance. Price came down, didn't quite bounce, but if we want to say it's a level of resistance again, probably in that same range. Price comes back up, hits a level of resistance, bounces again, comes back down. Now this zone is again, this red zone again, which was resistance previously, is still a level of support because price is on the upper side of that level. It bounces, comes back up, doesn't quite hit this resistance zone again until price now blows through, just trades right through with no respect at all to this zone that was at first resistance and then support, and had a bounce 1 here, bounce 2 here, bounce 3 here, and 4 major bounces, and possibly a 5th, a little bit, just depending on how you run your zones, but had multiple bounces and times where price was respecting and reacting at that zone before price then just goes right through and back down to retest this previously established support zone. Okay. And so price now hits this, has a reaction, bounces back up. But as we see, just like over here, we see that it was a small retracement versus an actual full bounce. So hopefully you're smart. And if you did get an entry, you were taking profits here, you know, so that you at least won something if you took that as an entry. But what we have is we see another bounce here where price reacts. And then what happens? We see price blow right through this zone that was a support zone that price bounced here, it bounced here, and it probably bounced somewhere, you know, in the past maybe to make this a previously established support zone. Price blew through that and hit this support zone right here. And what did it do? It bounced. Now, it didn't come all the way up to the previous, you know, like previously marked zone, but it did come back down and bounce a second time. And so we have a higher low being made here. Price comes back up, hits this zone that was originally support, was support here, but now look, price comes up and it acts as a resistance level. So now this support zone here becomes an area of resistance that price couldn't push past, and so price comes down. Now you don't know that price could come down and keep going down and keep falling down forever, but what happens is it actually just makes a small correction before continuing on its way up. However, you don't always know that, and hopefully you have a trading plan in place if you're trading with support and resistance that helps you filter that out. However, you see this bounce right here. So again, if you're smart, you know, you can take pips, you can take some trade entries possibly there, depending on if you have counter trend trading or trend trading, you know, in your strategy. Price then blows through this level of originally support, then resistance. Price, you know, doesn't respect it, doesn't care at all, blows right through and then comes right back down to retest it again. They act like magnets. But what it is the market makers are using those price ranges for entries, for folding in, you know, either market orders that have been placed, you know, large orders, or their manipulation. It can be one or the other. However, look at these zones like they can be magnets. Price can react there over and over again. And then you see price move on out, hit the very next zone that was resistance. It was also support a couple times. Now it's acting as resistance again. Price then blows through this zone here, which was, you know, a zone of support, and then a zone of resistance. And so now as price blows through that zone, doesn't even care that it's here, price comes back down to retest and fold some more orders in that were at this powerful major zone right here before having a lot of momentum, upward momentum, and coming right back up to this main zone here where price has bounced multiple times. And in this graphic, it's only been resistance. So you see, even just through this example, areas of support can become resistance, and resistance can become support. And so really, like I said, the way you need to look at it is that it is a price point or a range of prices where you have seen the market react in the past, and so that you know that there are either order blocks placed there or that this is an area where the market makers are using to manipulate the movement or liquidity in the market. And so what you're doing is marking those as areas of interest and areas that you're going to want to pay attention to in the future. Let's observe a few more things on this same graphic regarding support and resistance. Now, in a perfect world, price would react perfectly at every support and resistance level that you draw. But the truth is that more times than not, you will have zones drawn and price not react like you're predicting or think it will. And that's where a good trading strategy with a lot of filters come in. But at any zone that you draw, any zone, there are only 3 possible reactions that can happen. One is that price will reject the zone and move back away from that zone, just like you predicted and like it's done in the past. You could have this zone drawn and you can say, well, soon as price hits this zone right here, it is going to reject and plummet because that is what it has done in the past. And lo and behold, look, price comes right up. It does go a little bit further past. And what happens? Price rejects, bam, and it goes back down to the previous level. And you might have entered that way. And so the first thing, the rejection of the zone, and price moves back in the direction it came from, absolutely did happen. It happened again with this zone right here. Price came down. And if you said, I think price is going to reject here, you would have been absolutely correct. And price just came right up to this zone right here. And if you say, well, I think price is going to reject this zone right here, it bounced a few times, but it absolutely did reject and come right on down. And if you again said, I believe price is going to reject at this zone right here, it absolutely did. If you said, I think price is going to reject right here, it absolutely did. And the same happened again right here. However, you have another option is that price does not respect the zone and it moves right through it. If you looked at this zone right here and you said, I think when price hits this zone, price is going to reject the zone, meaning I think price is going to come up, hit the zone and move out and make me a lot of money. You know, that would not have happened because what happened is price just literally blew right through that zone, didn't even care, had a lot of buying momentum, pushed right up to this zone instead. So that didn't happen. The same thing you could have said, well, you know, I think over here where because we already saw a bounce here, we already saw a rejection here, and I think that price is trying to move a lot higher and, you know, with this pair, and that would have been your analysis. And if you'd have said that, price would have come down, had a rejection here. And so you're saying that proves my case. I know price is about to skyrocket. Mama's fixing to make some money in the market. But what happens? Price comes up for a small retracement and then plummets. And matter of fact, doesn't even respect, just has total disrespect for your little line that you drew right there and blows right through it. So the market can also not respect the zone at all, can end up blowing right through that pretty little line you drew. But the third option that can happen also is that you will see a fake out or manipulation at these zones. So many times, I kind of touched on it earlier, you'll see price travel beyond the zone you drew just enough to either fake traders out to think price is going to blow through that level of support or resistance that they're in, but actually price reverses, thereby rejecting the zone and going back in the direction from which it came. Just like this right here, you saw that price moved up and it went past it. And so a lot of traders see price, instead of it rejecting here below the zone, it sees price going above. And so they go, oh, well, then that means price is probably retest and then, push higher. And so, because they don't know that any of this has happened, none of this has happened yet. They can't see that. And so all you have is this line, this price action so far, this zone that you've drawn, and this zone here where you see, wow, there's a lot of buying pressure, a lot of momentum in the market. I'm excited. I think there's a lot more buying power here. And so price comes up, fakes everybody out to make them think it's going to go further, comes just enough to get some entries and fully rejects. But the other bottom line is it actually does move for another higher high in the future. But you'll see that sometimes at different zones. And the other thing that can happen at the manipulation of zones is that it goes just far enough past the zone to take out everyone's stop losses who predicted that price would reject at that zone and placed orders without waiting for confirmation, thereby creating lots of yummy liquidity for the brokers and the banks. And we can use this same example, for that, in the sense that people would place their stop loss right on the other side of this zone. And so they say, hey, I think price is going to reject on this zone. Price has rejected this zone in the past a ton of times. This is a strong zone. I'm sure that price is going to reject. And so price comes up and they place their stop loss here. It might have even come up and bounced a couple times underneath it and made people think, oh, my bias, my analysis is correct. We're about to plummet. We're gonna make some money here. And again, what happened is price pushed just far enough back to take out their stop loss that was right on the other side of this zone. And as they took out that stop loss, then price plummeted. And so you end up having sometimes manipulation both ways, and you need to get used to thinking about what can convince me right now that price is going to blow through this zone and continue, and what could convince me that price is going to reverse. And you're learning how to, make money and to deal with the market in that way. So even though you draw a line on the chart, do not expect the market to do what you're telling it to do with your random little line. You are playing in the institutional market makers playground, and you have to learn to make money in that environment. But we are strong in mindset and we are not victims. We learn our market edge through a tested strategy with solid trade management, and we execute over and over without emotion when the market doesn't do what we want. Sometimes at the zones, it really is. Sometimes it really is manipulation, to get people to enter. Plain and simple, it is bank manipulation. You already know that that's in there. And sometimes it is true commerce, though, and actual orders, countries exchanging currency, actual orders being folded into the market, that there's just not enough to fold it in at one specific price. And so price has to return over and over again to pick up orders here, to pick up orders here, to pick up orders here, to pick up orders here. And so you have a lot, it is supply and demand, but when you think about the marketplace of when orders flood the market and when people sell off, the price drops. When it becomes scarce, the price goes up. And you can think about it that way. That's not exactly what's happening in the Forex market. But again, sometimes it's manipulation, sometimes it's just true commerce. But our job isn't to always know or even figure it out. Nobody, not any trader out there, nobody can pick tops and bottoms of the market. Our job, as stated over and over, is to have a solid, tested strategy that gives us a market edge to execute those trades following our trading plan to a T. The other point that I want to cover here on this particular slide regarding support and resistance is that you tend to have two different types of support and resistance levels. You have support and resistance that are major and minor. Now, minor support and resistance levels don't tend to hold up. It's a level that can be marked because price did stall out at that zone or bounce off that level, but price is likely to eventually fall through or push past that minor level without much of a problem. Now, major support and resistance areas are price levels that have had and caused a trend reversal in the past. Where a downtrend ends and a uptrend begins is considered a strong support level. Where price returns to any major support or resistance zone, it will often struggle to break through and will often retest several times before moving back in the other direction. And so in this particular, graphic, what you see is your tops and bottoms. Your top zones are your major support and resistance zones, and your middle zones, they are zones where price did bounce, but they're minor zones in this graphic where they didn't tend to hold through. They were the ones that were disrespected, the most. They were the ones where price tended to blow through, those zones, but they are still, zones to be marked and looked at and are areas of interest. And you can learn, in the market where the trends reversed, to kind of be able to tell yourself where major and minor zones are. If you look right here at this start of this push, if you will see, even though price came and did something like this, the truth is the whole push started here and didn't end till up here. All this other stuff in here was just part of the move, okay? The true move was from this zone to this zone. Everything else, again, was a minor levels of support and resistance. The same thing from here. You had this level right here of resistance. And while price, bounced for a few minutes, then came up, retraced, came and bounced a couple times. The truth is the whole move that started here was really just a push back to this zone right here. So again, a major level of support and a major level of resistance there. And what you have also is that even though price came in and did some stuff and kind of reversed, the truth is the move starts here at this level. And while it does go up to this level, the truth, the higher high, comes in right here. And you can look at different ways of trading in different time frames of what's important, because even with that, it doesn't mean, unless your strategy says I only trade from major or minor support and resistance levels, but money can be made in any of these areas. I mean, even the smallest areas here can have money made, and so depending on your strategy and just how you have it set up, you can pull pips and you can pull trades at any place in the market. And the middle is where you're wanting to be. You're not trying to necessarily pick tops and bottoms. You want to stay away from that. And you want to look at these zones that once you get confirmation, you have your entry points. And that's usually a little bit on either side of the zone, depending on what you're trying to do. And then you want to take profit and you want to then let the trade ride out however it goes. But in looking at support and resistance, just know that there are 3 possible reactions at any zone: rejections, no respect, where price just blows right through, and a fake out where it does respect, it does reject, but first it's going to get a lot of liquidity engineering or some manipulation, in there, or your zone could truly be off and maybe the zone is actually right here, instead. And so your zone is off. And these are things that you have to take into mind when you're entering into trades, and then that there are major levels of support, and then there are minor levels of support. And again, I don't look at that as being as important because my trades tend to filter out trades on any level of support when I'm doing trading, with strategies on zones. And now what I want to do is move into and give you 2 examples of how support and resistance can be used inside of a trading strategy so that you can kind of wrap your mind around how support and resistance levels could be applicable to you as a trader, or how you could build a strategy around that, what that might look like.